Everyone is watching Bitcoin's price. The smart money is watching where the money is coming from. What we see at the top, that's the stablecoin dominance. What we see at the bottom, that's the Bitcoin price. Now have a look at how those two lines tend to move in opposite directions. When the stablecoin dominance is high, then the Bitcoin price tends to be low. When the stablecoin dominance is low, the Bitcoin price tends to be high. In other words, what's going on here is that money is flowing from the stablecoin market to the risk on assets, and then from the risk on assets to the stablecoin market. Now, why is this important? It's important because it gives us a range when Bitcoin is cheap and when it's expensive. Last time, when we bottomed out from the bear market, so at roughly $16,000 per Bitcoin, that's when the stablecoin dominance was at 16%. A lot of the crypto market was just on the sidelines. Once people started to deploy that capital again, that's when prices were able to rise. Now, in the last 2.5 years, the stablecoin dominance moved between 5 and those 16%. And this even works on the micro scale. Have a look at these green circles. A great time to buy was when we were close to the resistance. A great time to sell Bitcoin was when we were close to the support in the stablecoin dominance. And so this gives us potentially an answer when this bear market might end. The market was at maximum fear when the stablecoin dominance was at 16%. And currently we are not there. The stablecoin dominance is at 13%. So if it goes up by another 3 percentage points, we should expect Bitcoin to go down. This is actually my base case. When we look at various numbers, not just the stablecoin dominance, it seems like we haven't yet bottomed out. It seems like there's another potential wave of selling. I think I know where this wave of selling might come from. Now here's the net unrealized profit and loss. Again, a view across the cycles. Every single time when Bitcoin bottomed out at the end of a bear market, the average Bitcoin investor had to be in net unrealized losses. That's not the case right now. The average Bitcoin investor still, even after this sell-off, is 9% in profit. The question is, what could trigger a further sell-off? Why would Bitcoin go down further? Here's a potential hint of what might come. What we see over here is SK Hynix. It's the second largest stock in South Korea, just behind Samsung. That massive blue chip trades now like a penny stock. It went down from its all-time high by 55% in the span of just a month. This shows just how much speculation there currently is in the market. Just a slight miss in the earnings leads to a decline of more than 50%. That's how high the valuations currently in artificial intelligence are. In the grand scheme of things though, it doesn't look that bad yet, right? This is the Nasdaq 100, so the top 100 technology stocks in the US. That went down from the all-time high by only 10%. And very long term, we tend to go up. Now this is technology stocks in the US relative to all stocks. So the Nasdaq 100 divided by the S&P 500. Very long term, technology stocks tend to outgrow. They tend to make more money than all other stocks. What we've got over here, that's the dot-com bubble. We grew very, very quickly, then subsequently crashed. And there's two arguments we can make here, right? We could either make the argument that now the valuations are even higher compared to the top of .com, but we could also make the argument that this time around valuations aren't appreciating as quickly as they used to, right? During .com, we appreciated by more than 200% in terms of outperformance for tech stocks relative to regular stocks in the span of just 2 years. This time we are just in a regular trend. Still, even if we stay within that trend, tech stocks could still underperform by another 16% from here. And that's just relative performance. That's tech stocks losing more compared to regular stocks. And then we've got the inherent leverage by crypto. Because we all know that Bitcoin, at least to a degree, trades in line with technology stocks. We've got Bitcoin at the top, we've got the Nasdaq 100 at the bottom. Both experienced a very similar COVID crash. Both then had a similar recovery. They also topped at similar points in times. They bottomed at similar points in times. And the only difference is that over the last few months, Bitcoin went down while tech stocks continued to slightly appreciate. There has been a bit of a decoupling since October of last year. And so the question, what could potentially lead to another sell-off in Bitcoin, I think is best answered by just looking at that correlation. If technology stocks crash from here, this could push Bitcoin further down. The black swan event that we need this time around might not be a collapse of a decentralized finance protocol like Terra Luna or the collapse of a centralized exchange like FTX. It might just be another spillover. It might just be technology stocks selling off. A very similar effect to what we saw during COVID, right? When traditional finance is going down, a few days later, Bitcoin tends to follow as well. Just have a look at this. The real crash in Bitcoin happened after tech stocks already fell by 25%. There was a certain lag. And while we did have a bit of a decoupling since October of last year, I do think that if technology stocks underperform by 16% from here, that it probably will not have any positive impact on Bitcoin either. And that's then when we enter the buying territory again, when we get into net unrealized losses. Don't understand me wrong. I do think that Bitcoin relative to tech stocks looks healthy. I simply think that if tech stocks go down, it will simply drag Bitcoin with it, maybe to the same degree. This here is Bitcoin relative to the Nasdaq 100, and we are very low, and there is the potential for Bitcoin to outperform tech stocks by close to 140%. But my impression is that that outperformance will mainly come from less losses, not necessarily from massive gains. This implosion of the second largest tech stock in Korea, I think, is the canary in the coal mine. Usually, as a bull market progresses, people tend to rotate into more and more risky assets. We've got that in crypto, right? At the beginning, we see the recovery of Bitcoin, and people rotate over to Ethereum, and then Ethereum outperforms, and then people rotate over to the altcoins. This is normally the progression in the crypto market. We've got something similar for precious metals, right? First, it's gold that rallies, and then people rotate over to silver, and then silver suddenly spikes. Now, I think the same is true here with the AI boom. First, we had Nvidia rallying, and then people got more and more risk on, tried to find the next Nvidia, the next 10x. And the reason why I say this is because when we look at Nvidia relative to the Nasdaq 100, it did not outperform over the last 2 years. Wouldn't it make sense that the market leader that owns most of the base technology should be able to extract massive monopoly rents? It should be able to dictate prices. It should be able to pull more profit than the average company. Yet here we are, there was no outperformance of Nvidia relative to all of the top 100 tech stocks in the US. And I think that's simply because people are rotating away from Nvidia. Over the last 2 years, there was much more risk on speculation. It's very similar to what we see in crypto. When Bitcoin recovers, and then at the final spot, Bitcoin dominance actually falls. And then Ethereum and the altcoins rally. Here, have a look at this. This is a historical Bitcoin chart. So first, we had our altcoin rally in 2017. Bitcoin dominance went down. So people rotated into risk on. Then came the bear market, and Bitcoin was able to benefit from that, relatively speaking, because the altcoins sold off more. Then came the recovery. Then came the first part of the bull market. And even during that recovery, Bitcoin dominance continued to go up. In other words, at the beginning, it's just the cautious buyer that enters. Once that cautious buyer has made some money though, so Bitcoin appreciated by more than 10x. That's then when we get another altcoin rotation. That's then when Bitcoin dominance crashes. The altcoins had a massive run in the year 2021. So while Bitcoin still appreciated slightly, the altcoins did much, much better. This crash in Bitcoin dominance is another side of the expression of an altcoin season. And again, it happens after we have already rallied quite a bit. Bitcoin didn't do that well once the bull market was heated. And I think the lack of performance of Nvidia, the leading AI stock, relative to all other tech stocks over the last 2 years is just the exact same expression. People are now betting on the niche markets within the altcoin sector. They are betting on data center build out. They are betting on the model layer. They are betting on the chip manufacturers. And once those chip manufacturers like SK Hynix miss their earnings, that's then when all of those valuations come crashing down. So this market is full of risk and it's not easy to navigate at all. Now I made a dedicated cheat sheet on the topic. How can we avoid losses when most people get wiped out? Most people have way too much risk exposure, and it's not about being in cash, it's not about being in bonds, it's about figuring out what asset classes are relatively cheaper. As you've already seen with this chart here, right? Bitcoin compared to technology stocks is cheaper. But it goes way beyond that, so feel free to download this cheat sheet here. It's completely free. You can either get it via Telegram by clicking this button, or by scanning the code, or you can get it via email. Just plug in your email over here. No payment is required, no credit card is required. It's in the pinned comment down below. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.